Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news you need ahead of the Wall Street Open. Coming up, the Fed vigil starts, seen pausing on hikes. This is the US Central Bank. Of course, investors are keenly watching the path ahead. Now, auto strikes also in focus. Ford avoiding its walkout in Canada as the UAW prepares for more US strikes. And FedEx, we're watching that stock for you because the company is seen reporting higher first quarter profit on cost cuts and are also the misfortunes of its rivals. More on that in just a moment. First of all, a very warm welcome to this new edition of Beat the Street. Not long before Wall Street starts trading, this is how equity markets are looking. Just taking a look at the charts for you. Wall Street looking like this as we count down to the open. Of course, as you know, everything depends on what the Fed does and really what it says in its economic projections later on. And of course, that all-important dot plot. The street ended lower in the previous session. Treasury yields also rose as investors awaited on the Fed's decision. Dollar and gold prices also cautious. Little change there. Now, let's get you across the Fed now because the Fed is widely expected to keep rates steady, as I mentioned earlier. The Fed funds target rate range seen remaining between 5.25% and 5.5%. The bigger question is whether or not the Fed is done with rate hikes. Now, if this Wednesday's decision is a given, the November meeting could be a close call, and the FOMC economic projections will be of particular interest. Traders expecting, however, that the central bank will begin cutting rates by September 2024, futures pricing showed. But bullish investors say that signs of ebbing consumer price pressures will keep another rate increase at bay. Inflation, as measured by the Fed's preferred gauge, the Personal Consumption Expenditures Price Index, has eased from its 7% peak last summer to 3.3% in July. Meanwhile, resilient growth has also pushed strategists to revise forecasts. The strikes as well in the auto sector and a student loan squeeze all looming over the fourth quarter. Well, earlier I caught up with Chris Versace, CIO of Tematica Research, to find out what he's expecting to hear from the Fed.
When the Fed comes out with its policy statement later today, we expect to see a stance that's far more hawkish than what some may have been hoping, and even what they have been saying previously to that. In terms of the guidance, we do expect them to update their GDP forecast for the U.S. economy higher for 2023, but we'll be watching the Fed funds rate. We could see another rate hike penciled in for later this year, but we'll also be watching what's expected for 2024 because there is the chance that given what we're seeing in inflation, that the Fed may wind up signaling that rates may be even higher in 2024. And by that, I mean they may not cut 100 basis points like they targeted in July.
Tematica's Chris Versace's views on the Fed ahead of that anticipated Fed decision. IG's Axel Rudolph has been looking at inflation, bond yields, and how all that's feeding into the Nasdaq.
At today's FOMC meeting, we don't expect the Fed to hike its rates at this meeting, but it may talk about the rising oil price and its effect it's having potentially on inflation, meaning that inflation could rise again. And obviously, the central bank wants to avoid that and may thus hint at perhaps hiking its rates later this year. And the fear of that has led to basically US bond yields rising very sharply over the last week. And the impact on equities in the US has been quite negative, as we can see here on the Nasdaq 100. We fell all the way down to a 2-week low yesterday to 15,066 and are trying to stabilize above that today. Now, this is the line in the sand for me from a technical perspective, because interestingly enough, we actually bounced off the March to September uptrend line, and that so far is holding the Nasdaq 100 up. But if we were to fall through it and close also below yesterday's low at 15,066, then there is nothing preventing us to basically slide through the psychological 15,000 mark and back down again towards the late June low at 14,689 on the Nasdaq 100. Having said all that, from a technical perspective, provided we hold above 15,066 this week, we could actually see a bounce back. But for this to turn into a bullish medium-term trend, what we really need to do is take out the high that we saw earlier this month at 15,628.
Thanks very much, Axel. Now, one thing that the Fed will also be digesting will be the impact of strikes, especially in the auto sector. UAW brace for more strikes. I can tell you that there is no deal on the table just yet. The UAW union, as you know, has launched simultaneous strikes at 3 factories owned by GM, Ford, Chrysler, parent Stellantis, and this walkout might progress for longer as of Friday if there is no deal by Friday noon. In the meantime, Ford has reached a deal to avoid a walkout in Canada. The Unifor has said that we leveraged our union's most powerful weapon, the right to strike, and the gains achieved were hard fought over weeks of negotiation. Those comments coming after the Unifor, which represents around 5,600 Canadian auto workers, were threatening to go on strike at all 3 of Ford's plants in the country if a deal was not reached. But it looks like they've got a deal in the bag right now. But in terms of the Detroit 3, just showing you the chart here for Ford, which is all sessions on the IG platform. GM as well is another all sessions stock. These car makers, along with Stellantis, have not yet reached a deal with UAW. And the coming 2 sessions will be key, because if there is no deal by Friday, we could perhaps see even more prolonged strikes ahead. Now, after the bell, we've got FedEx expected to report higher first quarter profit on the back of cost cutting, which offset softening e-commerce volumes. The thing about FedEx, which is really key for our clients and also investors, is that it is a very special stock because it gives us a bird's eye view to how other industries are feeling about the economy and how they are coping as well. FedEx on its own, though, has been unleashing a lot of cost-cutting measures because people are buying less, consuming less. At the same time, it has also benefited from the misfortunes of its rivals UPS and also Yellow. Many customers who use its rivals shifted packages to the FedEx network ahead of August. Now, all this will be key. FedEx will keep an eye out for its earnings, which come after the market close. General Mills, another one that we are looking out for because they're expected to post a rise in first quarter revenue. Just checking on its shares, General Mills here. This is not an all-session stock, but you can trade General Mills on the IG platform. Keep an eye out for what it says about ready-to-eat cereals, snacks, and also meal kits. The company has been diversifying into meal kits to try and keep the demand for its goods up in a time when volumes are coming down, and also trying to push through price increases. Boeing, another one that we are watching. This is another all-session stock. It has slightly boosted its annual 20 year forecast for new plane deliveries. That's right, 2 decades forecast for new plane deliveries to China. This is because of economic growth, and also Boeing said that it's seeing increasing demand for domestic travel within China. China, as you know, is a big sort of hotspot for demand for plane makers because with more and more people urbanizing there and more people wanting to travel for leisure, it's seen as a big growth market, especially for airlines and plane makers. Chinese airlines, more than 4 years, this is in terms of deliveries, Chinese, this is for the 737 MAX as well, which is kind of causing that bottleneck because Boeing is still waiting to resume deliveries of its 737 MAX to Chinese airlines more than 4 years after they were halted after 2 deadly crashes, and has been all but shut out of new orders from carriers since 2017. And just a quick update on the IPO market. Grocery delivery app Instacart's stock fell nearly 5%, falling nearly 5% in pre-market. This is, of course, one of the stocks that we've been watching recently, Instacart, Arm, and also Nomura Therapeutics, all coming to market and heralding perhaps a revival in the IPO market after a 2-year hiatus. And just switching gear and checking in on oil prices for you, because oil ahead of the Fed fell nearly $1. Investors uncertain when peak rates will be hit and whether or not we're going to see the Fed leaves rates higher for longer. Just showing you the US crude chart here, because it's been extremely volatile of late. That's the hourly chart. But if you look at the daily chart, you can see just how volatile it has been recently. And what has been also particularly interesting is from the middle of June, you can see that it has been traversing higher there, gaining higher highs, and locking into this upward trend channel that I've drawn there for you. Currently, if volumes hold, we could see oil head back up towards the $91 a barrel mark. Prices are now being driven by not just demand, but also the supply side. Many outfits out there, many brokerages expecting that perhaps oil might actually get to $100 a barrel not too soon, partly driven by OPEC Plus's supply cuts led by Saudi Arabia, and also those falling shale oil production out of the United States. Now, not long now before we get to the open, let's just have a look at how the market is trading ahead of that Fed decision and also the economic projections. Quite a cautious stance there, as you can see. Similar picture for the US 500 as well, as we wait on the Fed to unveil its latest thoughts on the rate dot plot. Until then, this is it for this edition of Beat the Street, the show that gives you all the trading action ahead of the opening bell. For more analysis, do join me on @IGCom and @Angeline Ong on Twitter. This is IGTV.